All right, welcome traders. It is Tuesday, March 12, 2024. Let's get into the markets and the account for today. Talk a little bit about what's going on. Let's jump into the account first, and then we'll jump into the overall markets. Let me screen share with you. Let's get rocking and rolling on it. So today we closed with a delta of minus 212, which is up to 0.05%, still delta neutral, still within our 0.2 plus or minus range that we have, but we are negative delta as the market continues to plow higher. It's going to continue to skew our delta a bit more to the downside, which is totally fine. I do not mind having negative delta right here in overbought levels. Doesn't mean we're losing money. Actually, we were up today on the session, but we have negative delta, so we are better off if the market starts to pull down. Theta ended up today at 1160, so 1160.26%, pretty consistent with where we've been for the last week or so. With VIX falling, dead, down below 14, I think that's perfectly fine theta to be at. Net lick bumped up today a little bit more, 438, 858. So this is what the fourth straight up day, fifth straight up day for net lick. So 5 days in a row of gains. And then 270 buying power seems a little high. I'll check it here in the after hours. Yeah, it's about right. So yeah, 270, 172 on buying power. Puts us at, right at 51.66. We're pretty flat. So really nothing we can do. We're not going to add any trades. We're above our 50% buying power, but we're in good shape. We did close out $281 today. That was a ZB, so a bonds futures covered strangle trade, where we enter one naked and then another naked a little bit lower. On that, both of them closed out today for roughly 86%. My normal goal is to hold them, let them expire, but we were up 86% in just 15 days in the trade. It makes no sense to hang on to a trade for another 15 days to try to get 15% out of it. So it makes no sense there. So we'll close that out, add 281 to the month. We are still down for the month due to pretty good strangle loss here, but we haven't really begun to close much of anything yet for the month. So we're just biding our time to hit some of these ES 112s and a few other trades. And we are getting close to taking a bunch of stuff off as the market continues to move higher overall. So not too bad. We are down for the month. It is the 12th. We have plenty of time. We have a few things to go. We'll be okay. Now, one thing that's going to impact us this month is we are going to have hedges coming off this month. We're going to have some long puts coming off. We've got hedges that will expire on the 28th. So that will be about $2,000 loss on the hedges. I'm totally fine. Looking where we are, having negative delta overall for the portfolio puts us in a pretty good position, and we're just following our trade plan down here, which we've continued to make sure we hone and stick to it. But I think we're in good shape with the overall trade plan. We talked about the small account today. Spent a lot of time with our members today, over an hour, just talking about the actual trade plan itself, kind of the why, the goals for the plan, how we're going to monitor that plan, what the risk strategies will be, what risk management we're going to take. This plan for the small account, a little different. We've modified it, but it's a tad different than the larger account, mainly because with a small account, in my opinion, you can take a little bit more risk, and you have to take a little bit more risk. For most people in a small account, you're just starting out. Maybe it's discretionary. Maybe you're just starting to fund it. Hopefully, this is not your life savings. So when I talk about investing with people, especially my children and other people out there, we look at really the 3-bucket rule, and it's different than what you hear on the internet. And if you look up like the bucket investment method, probably not going to be the same thing I talk about. But the first thing for me, and some of you don't like this, but I try to encourage my kids to save as much as 30% of their take-home pay. Now, some of you posted on the last time I mentioned that. That's impossible. What world are you living in? Well, I'm living in a world where you can save 30% of your take-home pay if you're smart and you know what you're doing. Okay. My kids are smart. They don't have cars that cost them $600 a month. They're not driving everywhere. They're not paying down or taking out giant mortgages on houses. They're living, they're renting, they're stocking their money away. They don't have all of those homeowner expenses yet. Okay? They don't have children, and that's the perfect time, I think, to start to look at houses. But they don't have debt. There's no major credit card debt. There's no home debt. There's no car debt. They don't have any debt. Okay. So the only thing they're doing is shoving money away. And the way they're shoving money away is, number one, we ask that they try to put at least 10% into their 401k to get started. Now, as they grow older, I want them to really slow that down a bit. I want them to put less into that. But I think when you're young, it forces you to not see that money. It forces you to, not wonder where all of my money could, or be able to spend that money when it disappears right away. So until they build up that saving muscle, that's going to help them put 10, 15%. In fact, I think they do more than 10. They do like 15% right into their 401ks. Okay. So that's number one. Now, normally for most people, about the time you hit your 30s, my recommendation is don't do that anymore. Invest just enough in your 401k to get the full match and no more. Because we can make a lot more money trading than your 401k is going to make. But in your 20s, I think jamming 15%, 10 to 15% of your pay in there, putting it in a good S&P 500 fund and just letting that thing grow, and you don't miss the money. You don't have to do anything with it. So that's number one. Number two, you plow your money into a savings account until you get to about 6 months of salary. If you achieve that goal, you can stop there, which my children have done. Okay? And now they start to funnel the rest of that money into a Roth IRA now. You can invest up to $7,000 into a Roth IRA. If you max out your Roth, okay, now you can start to put that money into a trading account. So I'm not suggesting people just start a trading account until you've done those first three things. Number one, enough in your 401k to get the employer match. That's rule number one. Number two, 6 months of savings for any kind of emergencies that may come up. Okay? Lose your job, laid off, emergencies at home, something like that. Okay. Number three, maxing out, if you can, your Roth IRA. And then once those are all done and complete, whatever money you have left over, we put that in a trading account. So I guess technically it would be 4 buckets. If you have all of those buckets available to you, it would be bucket number 4. So number 4 is where they're putting it in. If they can, all of those 4 together, if you can get up to 30% of your pay in there, do it. Okay. You don't, and if you want to save a little bit extra, put some fun money aside, I'm all good with that. If you want to put 5% into an account, start to save for a house, save for your next car, save for vacations, you got to have some fun money. So, and I know my kids have some fun. Okay. So just making sure that they are strategically invested. But here's how we're running the small account in here. So we'll take that money, and right now this account is now at $21,000. So we started this at 10. It was at 16 at the end of the month, and then my daughter was able to put another 7,000 into this account to fund this a little bit more. So now we're at about $22,000 overall. But here's how this account is set up. We are doing 70% of our available allowed buying power, not all of our buying power. 70% of the allowed buying power is in long-term 112 trades. We're putting 20% in strangles on futures, and we're putting 10% into our 120-day 6 delta naked put strategy that we run. All of those together, when everything shakes out, should in a perfect world generate around $1,200 a month, which is about 5% monthly. Our goal is 4% monthly. It's more than our normal trading account because it's a small account and we can take some more risk. All right, so I wanted to make sure that we cover that a little bit here tonight. I'll focus a little bit more on small account trading, but I think you can be a little bit more aggressive. And my buying power usage in the small account is also going to be higher. So in this account, we're going to make sure that we're putting in around up to about 60% of our buying power. All right, we got about 10 minutes. Let's go quickly here through the markets. Stop sharing so you can see the screens. And let's take a look. Market big update today on ES. As you can see, this thing just continues to be parabolic to the upside, just a ridiculous climbing, just staying way over the 3 ATR. You are overbought on the weekly. Right now, you're up to 80 on the RSI. Squeeze starting to roll over. MACD is just hanging in there on the weekly. Definitely overbought and moving to the upside. So last week's little doji candle here meant nothing on it. So big update today, a little bit higher in after hours. Squeeze is firing to the upside. RSI is running. MACD is running higher on the daily. So we still, I think, have a little more room to the upside before maybe we start to see some sort of a meaningful pullback. I don't know. But right now, we're not seeing anything on the horizon. If we take a look at oil today, oil was down a bit to just fractionally, almost a sideways day on oil. It's down just a hair in the after hours trading. On the daily here, this thing just could not break really through this ascending triangle and get anything mustered to the upside. So we're just not able to move this thing higher. It's just trending sideways oil. And essentially, you've got MACD dropping, RSI flat, and you've also got the squeeze dropping on oil. Overall, this thing has been just in a sideways to slightly uptrend on the weekly. So uptrending on the weekly right now, but sideways. I think it's just you're perfectly set up to strangle oil here or 112 trades in oil, because I think the upside is where more of the risk may be. But we'll see. Maybe it rolls over. Comes on down. You're breaking through some of this recent trend anyway to the uptrend. So maybe we start to roll over. We are in a bearish PSAR signal overall. All right, so there's where we are on oil. If we take a look at gold, okay, gold here today, pretty good drop on the downside. Gold, big drop today, good pullback. Nice to see that happening. MACD has been rolling over. RSI has been overbought and starting to fall. Squeeze here might be losing some momentum on the daily. So maybe we're losing a little momentum on the daily. All that means is just a little too much too fast. We'll pull back. Maybe we'll hit the 9 and we'll bounce higher. If we take a look at the weekly, still everything is pointing up for the most part. So we're still in a bullish trend after breaking this ascending triangle. We ran up, set new highs. Now we're having a little bit of a pullback. I think right here, you just wait and see on gold a bit. If you want to pop a strangle in, it's a little early to me. I'm not going to do a 112 trade when we're overdone a bit like we are. I think I'm just going to let gold simmer a bit in here. So nothing for me yet on gold, not tradable. If I take a look at bonds, okay, bonds have been channeling to the downside, and that just continues here. So you can see us moving to the downside on bonds. MACD rolling over, RSI falling, even though the squeeze is firing to the upside. I just like bonds as a sideways trade. And even though you're in a downtrending channel here, I just don't see us going back to the previous lows in bonds. So I do like where bonds are. I think we're in good shape on bonds. Weekly is downtrending a bit. Daily has been uptrending to sideways. I think this just sets us up for more strangle trade opportunities, 112 trade opportunities. We've also got other trades running in bonds. So in fact, we took the one off today, which was our covered strangle entry, and I think we'll look to probably put a new one on tomorrow. And then lastly here, if we take a quick look at, well, we'll take a look at two more things. If we take a look at RTI, I'm going to extend this line out here. We're now back to the top of this channel. This is definitely a nice ascending wedge that you have going on in here. And it looks like really a perfect ascending wedge pattern. If this thing continues to go and breaks through here, could get a nice break to the upside on copper. We've got 112 trade and a strangle in here. Strangle's getting a little bit of pressure because of these up moves. Okay, copper's just winding its way up. Okay, weekly pretty strong. PSAR reversal this week. Daily still looks pretty strong as well. We'll be a little concerned on our strangle. We'll keep an eye on it. Does copper kind of follow gold? I'm not going to really touch base on the NASDAQ because it's really doing the same things that we saw on SPY. 18,491 is our new highs on that. So this thing continues to move to the upside. The last thing, let's talk RTY real quick on the Russell, breaking out of these ascending triangles, two of them in here as this continues, okay, to plow higher. Let's move this out a little bit more. Maybe this can become a little bit of we broke out. Will this become down, tap here, and then set the next steps? I don't know. Weekly, kind of mixed, but bullish. Okay. Daily, kind of mixed, maybe a little bullish and bearish. I think RTY is setting itself up for a nice strangle opportunity. We are in a 112 here. It's up 60% in 11 days. I think if we pull back any more here, I think you could be setting up for maybe a strangle, but I think we'll just continue to put some longer 112 style trades on. And then if we take a look at what's going on in the Aussie dollar, this thing's been up, it's been down, it's really just sideways. The overall momentum on the daily is down a bit for now, while the weekly is up a little more recently, but overall it's been in a downtrend since the beginning of the year. So I think when you're looking at downtrend with a little bit of a bounce here, uptrend a little bit here, very close to the 21 EMAs on the weekly and not far off of that on the daily. I think this is a great strangle opportunity. So we've got strangles running on these right now, doing fine. So we'll just let this thing continue to cook sideways for a bit. All right, so there's where we are overall on the trades and in our portfolios. We're doing well. I like exactly where we are from our setups. And again, like I said, take a look at your portfolios, but also look at your investing mix. Okay, look at your savings rate. Are you putting enough aside? Okay, you can't hit the 30, Tom. It's impossible. You don't understand the real world. I do. Okay, and I see people that can do it. Okay, they're just maybe more disciplined than you. Okay, out there. Now, they don't have a full family. They don't have a house. All of those things. Again, you've got to play it by ear. Once you have some of those things, you've got a lot more expenses. It's going to be really difficult. Totally understand. Okay. But don't poo-poo it because you can't do it. Others might be able to do it, and don't live outside of your means here. But you also got to have some money for fun. Okay. You got to have a little bit of that FU money, a little bit of that fun money, have a cushion there from a work standpoint. But the bottom line is, let your employer pay for some of your, your salary by matching your contributions, but really funnel most of your money after you've put enough away in savings into your 401k or into your Roth IRA. Get that maxed out, and then anything you have left over, if you can swing totally 10% along those things or 20%, great. Put it into a trading account. Come join us in the Discord, figure out how to trade that account, grow it from a small account to a large account. Ask the members today real quickly, what's the best way to grow a small account? And the unanimous answer was keep contributing to it. Okay? You can try to earn 5% a month or 50% a year or 20% a year or whatever you're trying to do. But the easiest way to grow a small account is to simply just keep funding it like crazy. The larger you grow it, and if you can continue to run those strategies that you've planned for on it, you're going to be in much better shape. All right. Take care, everybody. We'll see you tomorrow and stay safe. Bye-bye.